At exam times, the student needs a lot of revisions. So I have thought it wise to do some revisions, solve some past exam questions. So come on board and watch to help you. It's not just going to be this exam, but other exams, ICANN, ANAN, all professional bodies exam, so long as this topic is treated, you get it right. Follow me as we continue. So I have this question that I want to solve on capital reduction account. XYZ Manufacturing PLC has experienced continuous trading losses over several years. As at 31st December 2024, the statement of financial position disclosed the following. Ordinary share capital of 1 naira each, fully paid 13 million. Share premium 4 million. General reserve 1.5 million. Retained earnings debit balance 9.2 million. 10% loan notes 9 million. Trade payables 5.7 million. Total equity plus liability 24 million. On the asset side, goodwill 2 million. Patents 800,000. Plant and machinery 10,500,000. Inventory 5 million. Trade receivables 4.2 million. Cash 1.5 million. An independent valuation showed that goodwill has no value and should be written off completely. Patents are valued at only 300,000. Plant and machinery is overvalued by 1.7 million. Inventory is overstated by 600,000. Trade receivables include irrecoverable debts of 400,000. The loan note holders agreed to convert 50% of their loan note to ordinary shares at the rate of 1 naira 50 kobo. The company obtained court approval for a scheme of capital reduction with the following conditions. Ordinary shares of 1 naira each are reduced to 0.30 kobo each. The entire share premium account is cancelled. The general reserve is cancelled. The amount arising from the reduction is to be used first to eliminate the accumulated losses. Second, to write off the intangible assets. And then third, to adjust the overvaluation of the remaining assets required. Prepare the capital reduction account. Prepare the journal entries necessary to record the capital reduction, and then show the opening statement of financial positions after the scheme. So this is the question, and we are going to solve the question so that the student, when they see such questions in the exam or anywhere, will be able to handle it correctly. Okay, we're going to look at the question and then the solution. Though you may not have viewed the question because I'll be viewing it offline, and then I'll be showing you how to answer it. First and foremost, let us start with the journal. And in the journal, we're going to look at all the notes and the past journals on the notes. First, they say goodwill has no value and should be written off completely. So what it means is that we're going to write off goodwill by crediting goodwill and debiting capital reduction account. So this is how it is. Capital reduction account, debit, goodwill, credit, then goodwill written off. That is the explanation or narrative. Then the second one, they said patents should be reduced to 100,000 naira. Patents should be reduced. Patents are valued at only 300,000, which means instead of the 800,000 that was in the statement of financial position, it should be reduced to 300,000. The difference is 500,000. That is 800 minus 500. This should be written off to capital reduction account. So we have debit capital reduction account and credit patent. Then it said that the plant and machinery is overvalued by 1.7 million. So it means that we're going to reduce the plant and machinery by 1.7 million. So we debit capital reduction account with 1.7 million and credit plant and machinery to reduce plant and machinery. So we say plant and machinery write-off or reduction in plant and machinery. Then the inventory was overstated by 600,000. So that means we're going to write off 600,000. So we say capital reduction account 600,000, inventory account 600,000, credit. So to write off overstated inventory. Trade receivables also, they said there's a bad debt of 400,000. So we have to write off that 400,000 against the bad debt. So bad debt is debited with 400,000, while trade receivables is credited with 400,000 to write it off. Trade receivables write off. Then the next one is retained earnings, negative retained earning, which is a debit balance in the book. So we have to write it off because it's not useful. It's a fictitious asset. So because it was a debit balance, we have to credit it to remove it. Ordinary retained earning is supposed to be a credit balance, but in this case, because it's a loss, it has become a debit balance. So we credit retained earnings and debit capital reduction account to write off that retained earnings. Then the share capital also, they said, is to be reduced to 30%. Now, what it means that the remaining 70% will be written off, and the only value we are going to say in the share capital account will be 30%. So the share capital is 13 million multiplied by 0.7 have 9.1 million. So this will be a credit to the share to the capital reduction account. Share capital reduced to 30%. Share premium is to be written off. Share premium account is a credit account, so we're going to debit it to write it off. And then we'll credit capital reduction account. Share premium write-off. Then the general reserve also is to be done away with. So we have to debit the general reserve account and credit the capital reduction account. General reserve write-off. Then they said the loan note holder that are holding 9 million loan notes have agreed to convert half of it to ordinary shares at the rate of 1 naira 50 kobo. Half of 9 million is 4.5 million. Then at the rate of 1 naira 50 kobo, they are going to get 404,500,000 naira. But however, the share value is 1 naira. So if you do the mathematics, it will give you 3 million. That's 450 divided by 1.5 will give you 3 million. So that 3 million is the nominal value of the shares. So that will be the ordinary shares. The remaining amount is 1.5 million. That will be share premium. So that's why we debited loan notes with 4.5, credited ordinary shares with 3 million, and then share premium with 1.5. Loan notes converted to ordinary shares and the resultant premium. So that's the journal. The next one is to do the capital reduction account. Now we look at the journals. Anywhere we see capital reduction account debit, we'll debit the account. Anywhere we see capital reduction account credit, we'll credit the account. So in this place, we have capital reduction account as debit here, and we are using goodwill to debit it. So you come to capital reduction account, you debit it. You debit the capital reduction account without goodwill. We also come here, we see capital reduction account is also debited with patents. So we do that. So we pick all the places that capital reduction account is debited and we place the debit here. You should know that we are going to debit capital reduction account with that corresponding account. Like in this place, what I mean is, this is capital reduction, this is goodwill. So what it means that capital reduction account is debited with goodwill. We use goodwill to debit capital reduction account. So that's why you see it like this until the retained earnings. So that's it. Then the other one, capital reduction account, was credited in the share capital. Look at it. The share capital. Share capital was debited, capital reduction account was credited. So we come to capital reduction account to credit it. That's it. And then share premium also. The same treatment goes to it. The share premium. Then general reserve. So at the end of the day, you take the difference. You take the difference. Now, the difference is credit, therefore, is a profit to us. So we have it as 200,000. That's the difference. So we have done the capital reduction account. The next one is to look at the opening statement of financial position after the scheme. So this is what it looks like. Now we come to ordinary shares. Before, our ordinary shares in the account was 13 million. Out of that 13 million, we removed 9.1 million. So when we remove 9.1 million, we have 3.9 million. 9.1 is 30% of 13 million. We have 3.9 million after we remove 9.1. Now, we converted the loan notes, half of it, to ordinary shares, and we come here, it is 3 million naira. So we're going to add it to the 3.9 million to have the total ordinary shares that we have a balance. So that is why we have 6.9 million. The 3.9 million from the old shares that we wrote down, we reduced, plus the 3 million that we issued to the preference shareholders. So that's it. Then the share premium we generated from that issue of shares, 1.5 million. And then the profit we had here, that's what we are saying, calling retained earnings. Then the 10% loan note has now been reduced by half. So we have only 4.5 million. And then trade payables, we bring it down because nothing happened to it the way it is. It was not touched. Then there was no goodwill again. Goodwill has been written off. Patents reduced to 300,000. Plant and machinery reduced to 8.8 million. So we remove the 1.7 million. Inventory, we remove the 600,000 to have 4.4 million. Trade receivables, we remove the 400,000. If you look at it here, you'll see it. Remove the 400,000, we have 3.8 million. And then cash is what we have here. So our statement has balance. So we have the solution to the capital reduction account question. You see that it's not difficult. All you need to solve this is to know your debit and credit, and then everything goes smoothly. Thank you very much. We will bring more to you as you continue to watch, like, share, comment. And if you have any question, please do ask us in the comment section and we'll respond to you. Thank you. Bye.